Good morning and welcome to today's webinar hosted by Insurance Times and sponsored by Aviva. For those of you who don't know me, my name is Katie Scott and I'm the editor at Insurance Times. I'll be chairing the webinar today and steering us through this panel discussion all about building bespoke e-trading propositions, using digital trading as a differentiator and understanding how service requirements are changing and evolving as a result of greater online activity. As you can see, joining me today, I have a very impressive raft of experts. So we've got Karen Weir, Managing Director at Weir Insurance, Katie Fremantle, Managing Director at FSB Insurance Service, Derek Cowie, Head of SME Change and Transformation at Aviva, Rebecca Gambrell, Managing Director of SME and Delegated Authorities at Aviva, and Savan Shah, Head of Research at Insurance Times. So thank you so much for joining me, everyone. Really appreciate you giving up a bit of your time this morning.
Morning.
Morning, everyone.
So to start, let's really unpick the evolution of e-trading. As a model, it undoubtedly came on in leaps and bounds since it really got going back in the 90s. But what does today's version of e-trading look like if we want to establish a kind of base level benchmark? And then how do you guys feel it's really starting to evolve or develop as overall appetite around this trading route increases? What sort of changes really are you seeing starting to come to fruition or coming down the line? Karen, I'm going to pick on you first.
Yeah, I've been around long enough to remember the dawn of e-trading and great big fat computers and green screens that we used to do e-trading on. So the old days of Gilt Edge and those kind of software. So I don't think that the one thing that has changed is often the question set, which I guess in a way you wouldn't necessarily expect that to change, but certainly the look and feel of how e-trading happens is very different to what it was. But I do think that we haven't evolved as far as many other industries. If you think about industries like taxis on Uber apps and things like that, I do think we've got a long way to go in terms of e-trading with insurance companies. And for me, part of it is fundamentally, I think we have to remember that e-trading, particularly in terms of SME business, is a B2B sale. It's not a B2C sale. So there's an advised sale going on from an insurance broker to an insurer's website. And I think sometimes some of the e-trading style is very much aimed at somebody who isn't offering an advised sale. So some of the questions could be filled in by Joe Public. There isn't any nuance for the wealth of experience and advice that the broker can actually bring in, which is sometimes a little frustrating. So I think there is still a long way to go.
Definitely. Katie, would you agree with that?
Absolutely, and not to sort of copy what Karen said, but as much as digital trading has progressed and improved over the years, there are still gaps. And where we speak to thousands of small businesses every year, so the Federation of Small Businesses, they can be the A to Z of trade and everything in between. I think digital trading is meant to be a sort of tick box exercise at the moment, and it's very vanilla led. We have small businesses who are or can be as complex in their business activities as the larger commercial corporate businesses, but with that lower pricing band. And we find that if a certain few boxes are ticked to take them out of the vanilla category, but yet they're still too small for mid-market, that's where we're seeing the huge gap. And a lot of the businesses going to MGAs, for example, copying exactly what Karen said, we are heavily advisory. We want to make sure that we're advising our customers correctly. We're discussing enhancements to their policies, what they should be thinking about going forward. And at the moment, I'm not sure digital is totally there. It's great, and I think Aviva are there in being one of the leaders in creativity in that field. But there are still gaps, and unfortunately, a lot of lost business for the composites because it's just not there quite yet. But good start.
No, it's really interesting actually, because both of those perspectives that you've given are really tied in with something that Derek mentioned that fed into our e-trading report, which I'm sure Sav can give us more detail on as we progress through the webinar. But obviously around the rise really of more personalisation, greater bespoke offerings, really trying to add perhaps a different type of service onto the e-trading proposition. As you said, it might not 100% be there yet, but that's definitely a trend that is perhaps starting to inch through. So Derek, I don't know if we could come to you at this point, you know, in terms of eTrading's evolution of being more personalised, the creation of more bespoke offerings. What do you think that really looks like in terms of development, and what kind of products are perhaps more ripe for this type of personalisation?
Yeah, and just building on what Karen and Katie were saying, that I do agree with the question set side of things. It's a very difficult thing to change when you've got so many insurers anchored to it. But for me, the evolution is certainly from Aviva's point of view, the size of our business is our digital business is 3 times the size it was 8 years ago. So the appetite is definitely there, and we've been pushing that appetite, to expand the products within the question sets, that we've got. The bespoke side is challenging. I think certainly what we are doing in our commercial combined to modularize it, allowing brokers to tailor the cover to the client's needs, as opposed to there's your package of insurance, because sometimes they don't, clients don't always need everything, and having flexibility within the covers as well. So that's a level of bespoke. You could argue whether that's personalisation, but we certainly see it that way for the client. In terms of a broker proposition and differentiating that, we can within the current technology, but we are limited in respect of, as an insurer, we have to watch the costs, right? We have 17 products on Fast Trade today. That comes at a decent cost. To get variation of all those different products for all the different brokers is certainly the challenge to be looked at. And I think that's where you can start to personalise the proposition for the broker, and the broker can personalise it, for their client. Schemes for me is an area where there's a lot of opportunity. Schemes, the way it's transacted is probably the same as before Karen started. And it's very dated in the way it's transacted, and that is all about niche products. So as an insurer, we're trying to find a cost-effective way to provide a solution to that. In addition, eTrading will be everywhere. A version of, because depending on your definition of it, we've got digital transaction capability in our regional and mid-market business. Is that eTrading? To me, it is, because it's electronic transfer of information and etc. So I think those 2 areas is we continue to do in terms of the current and schemes and regional mid-market are definitely areas where we can do more.
No, definitely. In terms of schemes, is that an area you guys are seeing more in terms of the appetite for eTrading? Is there much out there in terms of the functionality to do schemes via eTrading, or is that still a very sort of new development?
It's a new development. There's definitely technology companies out there that have got things to offer. We've seen several, and looking at our schemes book, there's a nice wide variety. But I can't create 90, 100, whatever number of schemes that we have, different products. We've got to find a smart technical way, to deliver that in a cost-effective way for everybody, in the value chain.
No, definitely. And Rebecca, do you have anything to add in terms of that personalisation and perhaps creating a more bespoke proposition really that brokers can tap into through eTrading?
Yeah, absolutely. I think the guys have touched on a number of areas on it, Katie, but I think we've probably gone in terms of that evolution of eTrade from it being set up and being able to digitally trade products, where we've just been like, okay, we want it all to be straight through, nobody should touch it. And to Karen's point, actually, the broker still has a really important role in advising the customer and the client about their needs and what that is. So I think we've moved away from that. That initial sort of let's straight through, we'll make it really efficient, nobody needs to touch anything, to actually a more sort of hybrid. And I think that, we refer to it as digitally led trading, which means that actually you gain the efficiency from the questions or the process or the ability to ingest data, etc., really quickly. But actually, you've got a team there of dedicated underwriters that are ready to talk to you and pick up the phone or whatever that is to support the broker in terms of what they're looking to place. And Katie mentioned, you know, regardless of sort of the size of customer within SME, whether you're that micro end or the larger side, you can get really complex customers. They have different needs, particularly as we've gone through COVID as well, and a number of companies diversified and looked at different ways of trading themselves. Being able to have a team there, and we've recently set up at the beginning of the year a dedicated commercial combined team that are really some of our best more senior experienced underwriters that are there and ready to have those conversations. So I think that hybrid sort of digitally led but trading and underwriting supported or focused is really important, and that's what we've looked at certainly this year. And then I think the other aspect of it is, again, when eTrading was first set up, you know, AI wasn't even really a phrase, I don't think, let alone a concept that we could bring into this sort of digitally traded environment. And we as a company, you know, are looking at AI and investing in it in terms of actually how can we use that to support our brokers and their customers. And that's not about forcing it down that straight through process again. Actually, no one needs to be here. It's about actually how do we augment that and support our underwriters with the information that they need to know, support our brokers in the sense that they don't have to, you know, we don't have to ask them a million questions. We can ask them one, and we can then augment that using data enrichment and AI, or we can use it, and we've implemented this into our a number of our products as well, to suggest other appropriate covers. I've mentioned it before, but it's almost like that, you know, when you're shopping online and they're saying, oh, customers like you also bought this. It's exactly the same thing. We can profile the customer and then use AI to suggest actually other appropriate products or covers as well that they might need. So I think that that's quite new, I think, in the e-trading digital environment, but I think there's a lot that we can continue to do there and continue to focus on.
That's really interesting. And I just wanted to pick up on something that Derek, you mentioned about the sort of the number of products, because obviously there's been a lot of conversation around, you know, insurers looking to put more products available via e-trading routes, more complex products, for example. But is there a balance between quantity and quality in terms of what should be available via e-trading? What's the magic number in terms of perhaps not putting too many so it's a flood, but having the right combination? Karen, I see you nodding away there. What's your thought?
I don't think it's about the number of products. I really don't. I think we need to stop chasing the number of products that we have on there and investing in having a whole load. I think the whole journey needs to be slightly different. I love the digitally led idea because, as Katie mentioned earlier, if the company says no to the trade because it doesn't sit in that A to Z, then we end up going to some kind of hybrid online chat. And I think everybody who is watching this webinar now will have a war story of an online chat where the computer said no and that person said no, and that first line response is very frustrating. And I don't think just having a number of extra products in any way is the right way to go. I think that there has to be better support, and that whole hybrid proposition is really what appeals to me. And I also like the idea that, again, going back to the whole concept that we are advisors and we kind of know what we're doing. We're not customers coming online to buy a product and need to be guided through the process. We don't need to be guided through the process. We just need the underwriting and the premium calculations behind. And when you're looking at a site like Fast Trade as a broker that isn't sitting within a software house, you've already made a very clear decision that Aviva may be the appropriate underwriter within appetite that this risk sits. There's an element of underwriting that's already happened. So to then go into something where we can literally just get some pricing, some data enrichment in that, make sure that the underwriting is done at the point of sale, not at the point of claim, which is another one of the frustrations that I personally have. If you're going to check various databases at the point of claim, can you just do it when you took the policy on? There's no reason why you can't do it then. And I think there's such an opportunity at that first initial stage to really look at what support and what digitally led and hybrid intervention an insurer offers. fast trade is great. We're a very big advocate here, but sometimes we will hang up on a chat because we got the wrong person and we know she's going to say no. So I'm telling you that now, Becca and Derek. There are certain names that come up on a chat and we go, no, we're not staying online for this because she's just going to say no. And then we ring back and get someone else. And that's me being honest. And I don't think I'm alone in that. Katie, you might be able to say some of your colleagues do the same. But that is where I believe insurers have the massive opportunity of being able to pick up more business through eTrade by better communication with the broker, rather than saying, oh, well, it didn't fit one of those products. I'll tell you what, we'll put another 20 on and one might eventually fit. That feels like the tail wagging the dog a bit.
If I can add to that, Karen, I know it's sort of digressing slightly, but we appreciate insurance has been a really hard market for recruitment. And I know insurers have struggled with service levels over the last couple of years, and especially bringing people into sort of like the digital space as well, where eTrade is taking off. There's been a lot of pressure to service those teams. And I think it's bringing in a lot of staff quite quickly and potentially giving them training, but giving them a guide of what to say yes and what to say no to. I think quite a lot of underwriters, not necessarily Aviva, go automatically to that's been ticked, or you've provided that information, so that's a no, instead of actually taking the merits of the risk and trying to provide a quotation. So, for example, we had a case a couple of weeks ago whose food hygiene rating was outstanding, but just because they're a new venture, the councils are stretched, they hadn't been able to come in to do the rating yet. So they weren't happy to provide a quotation until they had that star rating. And it was like, well, have you thought of just endorsing the policy to exclude poisoning or food poisoning or anything until that date? Oh, right, okay, well, let me go back and refer that again. So I think the problem that we struggle with as well, we're fast paced. We've already spoken to, actually having a stat from another insurer already, we've already spoken to 3,000 members this year trying to do digital quotations. We need speed and efficiency. We need decision makers on the phone. And if an insurer says, oh no, wait, let me refer that, I don't know about that, regrettably, you're going to go to the next person on the list as well. So we just need there to be more, yes, let's try to fit that in, rather than, oh no, sorry, it doesn't fit. Let's try and find a new product to do it. Let's try and do it. Oh, have you tried that? Commercial combined obviously is the most flexible for anyone, and one of our most popular products because our members are so diversified. But we do appreciate it when an underwriter actually wants to write business.
I think
really
sorry to interrupt you, Katie. I think you can see, and Seven might have the stats on it as well, but you can see certainly that speed of response and referral process are things that are really important to the broker, and we can absolutely understand, why that is. Some of the areas that we're looking at actually and have started to implement as well is operational technology, if you want, that helps to support that speed of service and that speed of response, but also that referral process. So whether that's stuff like real-time resourcing, which means that we can make sure that the right number of resources, the right number of people are on the phones or on the emails or whatever that is, we can move the demand around in real time so that we can make sure, people are answering the phones, etc. And actually, since we've introduced that, we've seen a real improvement in our response times. So we'll continue to invest in that sort of element. But I think there's another piece as well that's around actually, how do we start to use, intelligent routing? That means that if you've got a referral, for example, it's going to the right person or someone that can answer that referral rather than someone that needs to check. There's a balance, obviously, because we want to train underwriters, but we can look at different ways to do that. But I think making sure that your call or your live chat or your email gets through to the right person that can deal with it appropriately and quickly, I think is really key as well.
Yeah, definitely. And I'd like to jump over to Sav at this point, because I know you get loads of feedback on these kinds of conversation pointers through our eTrading survey, the full report of which was published back in May, just ahead of the Aviva conference. So Sav, I don't know if you can pull on some of the findings that you've been digging into to help illustrate some of this.
Yeah, of course. And, all the points that have been made so far are very kind of prevalent and important to the entire kind of e-trading journey. And I think, the data and the e-trading survey always paints a picture kind of every year. And I think, we are seeing brokers demanding more connected tools, more digital tools to be able to have that connection. And I think great progress is being made. Yes, of course, there's always more work to do, but I think great progress is being made. So, for example, when we were looking at Aviva's kind of speed of kind of response, average speed for kind of each broker, we found that 98% of the brokers that took part were given a response or contacted within a day or less. And if going deeper into that, it was 87% who had a response with a half a day or less, and then it was 67% within a 2-hour window. So it was very interesting. And of course, it's not all the cases for every insurer, but speaking particularly about Aviva, for example, with the referral process, we found that 73% either had a good or excellent experience when it came to Aviva's referral process. But yes, there's a lot more kind of work to do, but there is a lot of progress happening kind of each year. So, for example, when we looked at the more kind of simple and traditional products in 2024, we found that 33% of brokers have to kind of wait a day or more, and that's improved significantly this year. So we found that 16%, so it's a good year-on-year change, by 16% of brokers have to wait a day or more. But there is a lot more kind of work to do when it comes to those kind of complex products. So year on year, we found that about 72% of brokers have to wait a day or more for those more complex products. So really back to the question about having that quality over quantity with the products that you are having on eTrading platforms, really ensuring that every step of the journey has the available resources, the people that can really come in, step in and provide that underwriting expertise is key to the entire e-trading journey.
Stats are really interesting to dig into. Thanks for sharing those, Sav. I'd just like to flag at this point, if anyone in the audience wants to ask a question to our panelists, do feel free to drop one in the Q&A chat, or if you want to ask Sav anything about the eTrading survey or research, do also drop a question, and we'll make sure to leave some time at the end just to go through those. I just wanted to sort of follow that up and pick up a bit more on the service element, because I think that's really interesting in terms of what actually is the definition of good high quality service in the e-trading arena now, because as you guys have all been saying, there have been so many changes, greater flexibility, brokers' needs have changed. So I thought it'd be quite interesting to look at that kind of dual service challenge, really, in terms of the insurer side looking to tweak their service models to reflect e-trading routes and how e-trading is being used today, and equally on the broker side, how you guys are using e-trading to differentiate your own businesses with your clients, and looking at what are the elements really that are at the forefront of successful e-trading and that service you can provide. Katie, I don't know if I'm going to pick on you first this time. I feel
bad of potentially sort of repeating things that we've already said, but I think flexibility, efficiency for us is important. You mentioned obviously at the beginning of the question, the communication side of things. I know that web chat is there for a purpose and it can help with a few inquiries. I think personally sort of the web chat communication can be taken too far, in the sense that if you wanted a referral release because you've submitted an ERN and for whatever reason it's referred, that's great. But if you're actually having an underwriting conversation, I'm really wanting to advocate to our team as well to pick up the phone, have that conversation and actually trade. Because you can end up just going back and forth for sometimes an hour, just asking more and more questions, having to then get more and more answers, rather than just actually having a conversation and hopefully being able to come with a resolution. But for us, it's all down to sort of speed and efficiency. We want to be able to trade with our chosen partners, and we want to have good products, of which Aviva is one of our obviously top providers, and we know they do have the flexibility there as well. And I think some of the benefits and the AI that Aviva is using, for example, to highlight under insurance potential human errors, that's vital to us, because as a broker you can be speaking to so many customers in a day that human errors do happen, inputting mistakes such as sort of business interruption. We had an example, for example, BI and business interruption, the indemnity period was put in as the sum insured and vice versa. Aviva highlighted that to us and said it was a decline quote because of that. So it highlighted it for us to check and correct. So these things are fantastic improvements, and that they can really support a broker in trading. So we're all for it. Apologies if I've sort of gone the long way around answering the question.
No, we love it. We love it. That's all good. Karen, do you have anything to add?
There's definitely space for a building relationship with insurers, definitely. The two bottlenecks I get from brokers I speak to and from my colleagues is the double keying. So rationalize the number of keystrokes that we do. So doing it through software platforms as opposed to doing it through extranet sites. And then the referral process, which is often very patronizing for the reasons that we've said. So I do think there is space for improvement in both of those. And let's put aside the software house, because I know there's a lot of different factors that have to happen to make things work there. But let's look at things like the help and support, the online help and support. I think there is an opportunity for insurers and brokers to work together and actually have an agreement whereby certain brokers are given a level of delegated authority, if you wish. We're not talking about being a pen holder for a risk, but we're talking about potentially, if I went to Derek and said, look, my guys have all cert CII, we've all done IF8 packages, we know what we're talking about. This isn't our first rodeo. We've been around for 50 odd years. We've done this for decades. Can you please make sure that when we need to do an online chat, because it doesn't quite fit the mold and we understand that, can we make sure that we get through to level 2 response team? Because we're probably, like Katie said earlier, we're probably going to have an issue with a solution, an underwriting solution. Mm-hmm. So Katie made the great example earlier of why don't you just endorse the policy to be able to make this happen? Now, I'm not saying that as brokers we know more than some of the Aviva underwriting staff. I wouldn't dare say that. But I think under some circumstances, a broker who brings an underwriting solution should be recognised for such, and perhaps be able to, I don't know, unlock the next level on their fast trade account so that they can get some things overridden with a quick conversation or whatever, because it can be very frustrating to go to first level support and go, look, you need to put me through to somebody higher because this is actually, we know we've done this before. You need to get authority that we know you don't have. And I think there's a huge opportunity there for insurers to build that relationship. It's kind of bringing to life what we do on a person-to-person trading, where we might have an underwriter in our office, or we might go to an underwriter's office and say, these are the cases we want to talk about. Can we just suggest what you put forward? And that, I believe, is where that sort of hybrid AI meets people is definitely the way forward for me. I think that's the opportunity for insurers.
That's really interesting. Derek, do you think that level of personalisation between sort of bringing that relationship with the broker to life in terms of how well you know them and they're experts, is that something that you see happening perhaps in eTrading?
On the back of what Karen has said, it's a fantastic opportunity. It's at the moment, I mean, I absolutely get all the experiences that the guys or brokers get. It's difficult to know what's coming through the phone or through live chat. We know when it's a referral that we've generated, we know the level of underwriter that, it needs to point to. And we certainly do that behind the scenes in terms of the renewals and the new business referrals that we get. But what's coming through in the live chat on the phone, pointing it to, the right person is definitely, technically, I'm thinking, how do you do that? But undoubtedly, there'll be technologies out there that, will help solve these problems. Just going back to the the capability side, which Katie mentioned, that has been a challenge for us. We do have a fair amount of experience because of the speed of growth, of digital over the years. And I think we have to remember with digital that the system is dealing with all the simple inquiries, i.e., the system's got rules in it to, say, yes or no, which means the referrals that come out and the inquiries that come out are exactly what, what's been described as the more complex stuff. And therefore, you do need higher skilled underwriters. So if anyone thinks, digital is an area where, you can have your inexperienced underwriters, etc., it's fundamentally wrong. Because the system deals with all of that, as I say. So it's undoubtedly a challenge, and it's that we are pushing the complexity of our products up the way, and we need to bring that capability with it. And as Rebecca was describing earlier, we definitely recognise commercial combined. Commercial combined has the highest referral rate out of all our products, right? That's by design, because the product by design is more complex. But we learn from these referrals that we generate, and we then look to automate them where we get confident. We understand the action the underwriters are taking, and if we can automate that in the future, then we would do that, and therefore for the broker it's a much smoother straight through experience. So lots of great thoughts around that. Just on the phone and live chat, I agree with Katie. Even though we see within Aviva a very 50-50, 60-40 in favour of live chat, we believe, and statistically, the phone is more efficient for us. It's quicker, as Katie has described. It's quicker to deal with. So we would prefer that, but we absolutely recognise that live chat has its place. But resource management, as Rebecca says, balancing the both. We've got new technology in to help us do that. So, and we're definitely seeing better results in terms of the service that we've been providing recently since we implemented that.
That's really interesting. Rebecca, do you have anything to add?
Yeah, I think it comes back to what we were saying earlier, Katie, in terms of that flexibility. If you've got more flexible products, then it's easier to have that flexibility in terms of the underwriting or adding endorsements that aren't necessarily from a standard bank of endorsements that might be nuanced to the customer. So if we if we're focused on building flexible, modular, scalable products, and I think that helps to support the pieces that Karen and Katie have just spoken about there. I think as well, it's then about actually, it comes back to that sort of hybrid digitally led model, empowering your underwriters to do something that the system won't do, because that's where they can really add value. So if you can empower and support and train your underwriters to be able to make those decisions and support the things that, in Karen's example, actually, can we just do this, or can we do it in a different way? Because we've got a solution, but can you support us with it? On a case-by-case basis, then I think that really helps to build that hybrid trading. Derek made a point about the fact that actually the system will take out a lot of the stuff, because everyone will have built rules around their appetite and that sense. So those referrals then that come through, or those conversations then that come through from the brokers about their clients, the brokers knows their client better than we do. So then enabling the underwriter to have that conversation, I think, is really important, and empowering them to be able to do something that's not out of the box, or not something that the system can do, is really key. Derek mentioned as well that we continue to look at our referrals and whether we said yes or no to them, and try and reduce those as much as possible, and let the system take away the ones where it doesn't need a conversation, or it doesn't need an underwriter, so that they can really focus on adding value to the ones where they do. And I think that again is where not to make this into an AI conversation, but that is where AI and agentic AI can come in really useful, because you can analyze those, take away the demand that if you want is non-value add, and leave the underwriter empowered to make decisions, to focus on having the right risk conversations and discussions with the broker about the client, and remove the sort of the task-driven non-value add aspects of that.
Definitely, that's really interesting. And I just wanted to go back and pick up on something, Karen, I think you mentioned about the relationship between insurer extranets and then the software houses. There's obviously been a lot of movement in this area. Do you think that perhaps there's friction between the use of these two sort of routes, I guess, for eTrading that impacts service? Does there need to be greater alignment, greater collaboration? What are your thoughts on that relationship, I guess, between extranets and software houses?
For me, I go back to the fact that as brokers, as advising brokers, we tend to look at a risk and we know where the appetite or where that risk should sit. And we have a good idea about what that client does, what kind of client they are, if they're going to be, if they're a new client, if they're going to scale quickly, if they need something that's got wider policy weight. And actually, we do quite a bit of underwriting before we even start. So for me, it's not super important. about not being on the software platform. But it does, if we do have to go to an extranet where we have chosen that this feels like it's in Aviva's appetite, or we've got great relationships, they've got great products, we've already done a little bit of filtering and decided where we want to put that client, then it's got to be about that fulfillment behind the scenes in terms of making that journey slick and not too much friction in trading there. So I suppose it would be lovely if it was all through the software houses. However, given that, and I noticed in one of the questions, somebody's asked that question about given applied and OpenGI scaling back, you know, there's very little bright horizon there in terms of doing that. But I don't think we should forget, going back to what I originally said, this is a business to business transaction. We do a lot of the underwriting before we even take it to an insurance company, even on the eTraded stuff. In fact, especially on the eTraded stuff, because we have to do some amendments to that data before we even key it in, because we know it doesn't fit. So we've already made a decision in some cases about, well, let's look at the trade, what's the nearest fit? We're not customers just going in and pressing this button themselves from the back bedroom. We've done this for years, and I think that if the extranets have that fulfillment behind the scenes to be able to make that journey frictionless, then actually it doesn't matter that we've had to go to 3 sites and rekey, almost, providing it's not loads of friction in there and loads of chatbots that try and just tell you what you already know just to make that journey a bit longer. That's my personal opinion, and I am a regional broker that's independent, and we really value the kind of client broker interaction. So we try to do that in terms of treating each customer individually. So that's, from my perspective, it may be entirely different from other brokers, but that's certainly where I think the value of a broker is. That
makes a lot of sense. Katie, do you have anything to add?
It's a tricky one, because I do agree with what Karen said. But going back to the point that I made at the start, Actress is our platform. We use that as our data storage. So any inquiry that comes through to us, we'll put that straight onto Actress. So the most efficient way for us to provide a quotation is to throw it through Actress first. If it doesn't fit, then we're more than happy to go onto extranets, but there tends to be little harmony in the question sets. So sometimes you'll have to go back and ask additional questions, which again is taking up time, potentially frustrating customers. And also it then raises the highlighted issue of then dual pricing as well, because I understand that on Actress you're having to, sorry to keep saying Actress, but it's our platform. Actress is trying to put together potentially 12, 14 insurers in harmony for a commercial combined package. And I understand why insurers then promoting their extranets, because they can be more granular, they can highlight on the benefits that they see and the positives of a risk. But then you can get quite significant price differentials as well for the same risk, which is quite confusing, because then which way do you go down? Do you go down what you think is to be the most competitive and try to adapt that one, or do you speak to the more expensive quotation because you think that's going to be more suitable, because it's obviously been based more on the requirements that the insurers requested on their extranet with the additional questions? So it's a bit of a battle that we have at the moment. And sort of going back to, I'm not saying that eTrade is perfect in that sense at all, because we do have a renewal dual pricing issue as well. We'll have digital policies coming up for renewal where there's quite a significant pricing increase. And if it doesn't fall in within our renewal strategy, we'll remarket. And then you'll see that same provider come in at a more competitive new business rate. So it's a hard one. I don't want to get the violin out, but it's a hard world for the broker to navigate in which direction to go to be providing most sort of TCF to their customer.
That ties in really nicely with a question we've had coming actually from Tony, asking about, he wanted to get your panel thoughts really on the question sets that are available via software house versus extranets. Is there a risk other non-software house platforms are becoming more dynamic and flexible in their risk capture approach? So that those comparisons between the question sets. Does anyone have any thoughts on that one?
I'll have a go at that one, Katie. It's interesting, right? The question sets, particularly within software houses, are supposed to be unified. I'll say supposed to be, because there is some variation between the software houses. But we as Aviva don't need all those questions answered, right? And that's why we have Fast Trade. aside from fast trades there for brokers that don't have software houses that we're on. And by its very nature, fast trade is faster because it's got fewer questions, because we're only asking the ones that we need for price and cover and risk appetite. And we can control that broker experience, notwithstanding the benefits of software houses. I absolutely understand them. But certainly for us, the products are fundamentally the same on both platforms, and the rating. But as Katie's illustrating, because of the number of questions that sit in a software house, for me, they could be a lot fewer questions. You know, and there's also the opportunity going forward to enrich some of that. You know, Katie mentioned our underinsurance, you know, abilities. We've got a dearth of, you know, millions of lines, or probably trillions, you know, of data, which is all, you know, which is growing all the time, where we can get confident, you know, about that is the sum insured. We haven't taken that step yet, you know, but that's the kind of steps in the future that you can see, and that's just sums insured. I think, you know, business interruption's another one. You know, it's the questions can be fewer with more data, use of data and data enrichment.
I think
that point is challenging.
Sorry, I was just going to say, Derek, do you think that that disparity, you know, between the kind of insurer extranets and software house, there should be even greater kind of collaboration? Because we saw 61% of brokers who took part in the survey, they're using a combination of both trading routes, and you know, the rationale between using why brokers use insurer extranets, for example, ease of use or better pricing or better covers, or insurer maybe encouraging the broker to use, whereas with the broker system, it's, you know, the ability to consistently compare. Do you think a lot of these issues are arising because of that because of greater collaboration is needed, so that the experience is pretty much identical, whichever route the broker takes?
Well, there's a number of factors, I think, Savan. I mean, there's products, for example. You know, we've got more products on fast trade than we do on software houses. Not many. There's only a couple that we don't have on software houses now, but we're actually working on them. You know, so that drives people to extranets, because there isn't a product that they want from a particular insurer on there. You know, and for us, we've got limited distribution in terms of our software house. So for a broker who has a different software house that we're not on, then they might be having to use our extranet versus they might be using our software house for other insurers. As far as the disparity, I can't speak for others, but certainly from our point of view, the product, the rating underneath if I talk technically, two front ends, they're actually coming into one back end for us. You know, so you know, the perception of the disparity, well, I say perception, maybe there's factually disparity, you know, but certainly from our point of view, it's not what we have technically, you know, built. That's not to say it can't happen, because as Katie says, there's lots of questions on eTrade that, and they can be different. You know, some of the drop downs may be slightly different, or, you know, is it apples for apples in terms of how it's being keyed in? But the part that the question that was on the board, actually, which I can't see, but if I remember rightly, new technology players, you know, can really push this, you know, and challenge it. But they have to do it in a smart way that engages all the people on, you know, insurers, brokers alike, as to what they want and what they need, you know, and for this to operate smoothly. But there's definitely an opportunity for some to have a look at what we have today, because I do think the question sets are far too long.
Can I possibly add, Katie? Sorry to interrupt as well. It's something that's been on my mind recently. It's a form of education piece for brokers. So we're slightly different to Karen in the sense that our telephony team are probably of the younger generation. They've got less experience in insurance, and they'll ask the question that's on whether it's the extranet or on the software house. They'll select the answer from what the customer has said, but depending on those answers, it's going to trigger referrals or declines. And there is very little feedback from the insurer as to why that is the reason and what information is then needed because of that answer. So, for example, we had a risk a couple of weeks ago and it was a cob construction, it's referred. So what information would you need to add based on it being a cob construction? If there's any more sort of terminology, sort of cladding, if it's this, if it's declined because it's got cladding, what do you need to know in addition? Because the our brokers won't necessarily know what the underwriters need to know, and that just sort of delays the efficiency of the trading process. So I think if there is possibility, whether it's the extranet or software houses, to actually highlight the reason why it's referred, what information is needed going forward, so potentially there is an underwriting decision to be made, I think that would really benefit us and any other in our scenario as well.
Yeah, and that's a really interesting one, Katie, because on an extranet we have that ability as an insurer to flex that, and we actually have that on certainly our high volume referral rules. Where if you select, it will tell you the referral, and then it'll tell you this is what we're going to ask you. So if you can give us that up front, it's not in every referral rule, so you might not come across it, too often. But we have tried to put it on our most common ones. Bearing in mind we do have a lot of rules for specific purposes, and we keep an eye on that. It's that if we can't automate it, then how can we speed it up? And certainly getting that information through quickly, because as you say, you phone us, we ask you a question, you might have to go back to the client, it really does make it more efficient if we can be more upfront. But the extranet does offer that flexibility. Software house, it's more challenging.
Really interesting. We've had a couple of questions come through around sort of eTraded products that I just want to sort of fire at you as we're sort of approaching the last sort of 10 minutes or so. One attendee has commented that they noticed that eTraded products tend to lag behind when it comes to trends in businesses and what they need. This broker is seeing clients requesting, say, 10 million of PL due to their own contractual needs. And it seems to take a long time for eTrading products to catch up. The comment is that they assume that these trends would have been seen across perhaps non-eTraded lines of business, and that they trickle down, but it's taken a while for that to then factor through into the eTrade routes. I don't know if anyone on the panel has any comments or response to that.
So, without hogging the floor, someone else wants to. If you look back to years, the limits of the products have expanded. One of the things we look at is decline. Why did it decline? And if we start to see trends in that, then we'll start to look at expanding the product. Now, don't get me wrong, from an insurer point of view, there's a confidence thing around if you're e-trading that size of risk, how do we feel about that? But what we often do is we support it with a referral. And that's where I think referrals can be seen as inefficient, but they can also, for me, be seen as a healthy intervention, for all concerned, to make sure that that for that size of risk, as the example, we can underwrite it properly. And that's where what Rebecca's talking about, that the morphing between a digital service and a regional mid-market service is actually getting a much closer, because the underwriting needs. So I think that we are pushing them. They can be pushed a lot more. I think you can actually e-trade everything, and just have referral rules, but that goes back a wee bit back to the data capture and etc. It's not quite there, and it's a big tanker to turn that data, the risk capture. But I think we're making progress. Obviously, we would all want it to be faster, but we certainly look for the opportunities.
Definitely. Rebecca, do you have anything to add on that one?
No, I'd agree, and I think that there's an element of it's easier, I think, or it's quicker. It certainly is quicker at the moment to be able to say to a mid-market regional team, for example, it's fine now, we can underwrite £10 million PL in this example, and we don't need to ask questions, or we just need to find out these facts. To be able to then replicate that into an e-trading model, you've obviously got to make changes in systems, line up resource, test it, etc. Line up your software house to also make the changes. So I think some of the delay will come in just the process of being able to change a digital system rather than just tell an underwriter, if that makes sense. So I think there is an element of that, and there are definitely ways that we can look at how we speed that up, or how we foresee some of the questions and the ask. We spoke about right at the beginning in terms of the evolution of eTrading, and about actually the fact that brokers, insurers, customers are more and more comfortable to put more complex risks through a digitally traded route. So I think whoever asked the question, you're absolutely right. I think we need to find a way to speed that up. I think Derek's right. It is turning, but there needs to still be a level of comfort in the sense that we're underwriting in the right way, or we've got the right risk selection. But yeah, I think an element of the delay will be in that technology change as well.
That's really interesting. And another one around products that's come in is around sort of SMEs that are looking to grow abroad. This attendee is saying that they've seen more of their clients looking to export business to, say, the US or Canada or other places abroad, and that this is typically met with apprehension. Although understandable, does seem to be a need for eTraded products to sort of expand geographically, I guess. I mean, what's your take on that? Is that something that is being looked at, explored? Is it quite common across eTrading? Is it rarity?
That's a really good example, actually, because in our commercial combined, we've seen that as a decline in a referral. And we have increased I think it's US exports we're getting into underwriting now that is pushing the envelope of my knowledge, but we've certainly increased the percentages of how much we are prepared to accept. So a good example of that, keeping an eye on what the brokers are looking for and their clients are looking for, and us expanding our appetite in it. So we've definitely expanded that one recently, or certainly in the last 12 months on our commercial combined.
That's really good. Katie and Karen, I don't know if that's something you guys have seen as well as a trend.
Yeah, I tend to agree with Derek. There is a land where all business can be e-traded. It's just whether it's done for the volume in terms of something that fits the bill and you can just put it through the sausage machine and get it traded, or something which needs a hybrid approach, and actually all you need to do is to have that flexibility, which is inevitably going to be through software sites and not through extranets and not through software houses. But they're almost two separate things. But I don't know why in today's day and age we can't be transacting pretty much everything electronically. It still frustrates us daily when my claims team, for example, if a client has an accident, they'll send us a WhatsApp video of the damage and the aftermath and the dash cam, and we struggle to be able to get that across to the insurance company's claims team. This is where the MGAs are so much more nimble, because they can accept things like that, so they can get the whole picture. That technology is instantaneous, and I think it is that turning that tanker around with large companies. They just become very Luddite, and this is, in my opinion, where the MGAs have disrupted the market, because they are taking technology to the next level, whereas we're kind of a little bit slower with some of the larger organizations. And I think that's ripe for disruption. You wouldn't need to do much as a composite to differentiate yourself from the rest, is my opinion.
MGA is getting involved a lot in those e-trading routes now then?
More and more we are finding that is happening, because I think eTraded is almost like it's a bit like saying AI, eTrade. What does eTrade mean? Does it mean that we had a couple of emails in the chain? Does it mean that we did? And actually it's a bit of a catch-all. It's about, for me, it's about making the whole journey, not dumbing down the advice process, but certainly removing the friction to sale. So definitely removing the bits that doesn't need to be, that doesn't need to take the time. That data enrichment piece is so huge. The capability that Aviva and other insurers have got to almost understand that information about a client from their website address before they even ask the 21 questions or whatever we've rationalized it to, they're almost irrelevant. So for me, there's still a lot of things that we could fundamentally do by just getting some of that basic stuff right. And not worrying about, have we got all the next products onto the software houses and whatever. Just being really innovative around some of that would be great for us. And I do get that it's harder when you're a larger organization, but I do think it's ripe for a disruption.
That's fascinating. Katie, do you have anything to add on that MGA perspective?
Yeah, not really. I agree with what Karen said, to be honest. I think if you come against friction or barriers for digital trading, then the MGA solution is the prime example. I've said before that obviously if you get a complex small business with a lower premium banding that's too small for mid-market, and you're going to get an MGA who's hungry for business, has got the underwriting capability, flexibility to provide a turnaround and a formal quotation within 24 hours, you're going to go down that route, which is unfortunately where a lot of our business has gone.
That's really interesting. And as we sort of come to the final few minutes, I just wanted to ask you all a question and get each of your perspective on it. But what would you say is perhaps the innovation you'd most like to see come through into that e-trading arena, so to speak? If there was one innovation that isn't there at the minute that you'd like to see or to action, what would it be? Who wants to go first on this one?
I would like to see that when an insurer allows us access to eTrade, that we are almost taken through a process of earning that login, and we kind of get that next level so that we can earn our ability to get the right level of support that we want. So if we're a newer junior user, we get a different experience to somebody who just needs you to put the overriding code in, please. I'd love that, because I think that would really help our guys who've got a lot of experience.
That sounds good. Derek, I'm going to pick on you next.
Yeah, no, that's I like Karen's, I have to say, and I'm not copying, taking a cop out on that. But no, for me, I think it's the enrichment side. How can we use technology to find out more about a business? Whether it be for our use or to present, to help the broker and their clients, because we recognise some of the questions that we ask and that we want answers to are, they're certainly not easy for a client to answer, which is the value where the broker comes in. But I do think we can help. Technology should be able to help that a lot more than it is. I think under insurance is a great start. It's a big issue. We've got tools to help with that. But what else can we do? The business description, I think, is another one. The trade codes, don't match the diversity of businesses these days. We've tried to take measures to help that. To get a broker to reflect the business that they actually are. But yeah, I think there's got to be better technology solutions to help with some of that.
That's a good answer. Katie, shall I come to you next?
Yeah, I'll probably sort of cheat and just sort of go along with both what Karen and Derek has said, and I think probably just to adapt more of what is already in the making, potentially to support the broker journey. It's easy for us to say to a small business when they come to us, we recommend you do this, you're currently underinsured, your business interruption isn't sufficient, have you thought about cyber, have you thought about D&O? They're potentially just saying, oh, you're trying to put my premiums up, you're trying to get more sort of income from this. I think additional support from insurers to provide sort of feedback, AI from other sales as well, that a similar business has purchased this. From that, it's a bit of a summary, a business summary of what the insurer's database might be seeing, that we can use as supporting evidence to what we're saying as well. So it's not just us, it's that we've got an insurer who's got actual evidence behind what we're trying to say. Just that it's like an additional support route.
That's really interesting. And Rebecca, what about you?
Always good to go last on these sort of things, but I think it is exactly that, as the guys have described. I think it's that almost that AI powered risk profiling that can help support either, to Katie's point, the customer understand their needs and requirements, or if it's to reduce the number of questions that we need to ask. And we've spoken a lot around how that can support underwriting and underwriting referrals, etc. But also that can be really supportive in the pricing sophistication. And the better the pricing sophistication is, the more accurate a price that you're going to get for your client and for your and for the risk. So the more that we can build in data enrichment and then AI powered risk profiling to support both the broker and the client, I think that's really key, and that's what I'd like to see more of. We're starting to see, we've mentioned a few examples. We're starting to see it come out, but I think it's only going to get bigger. There's no running away from it. We've all just got to accept it's coming, but actually, how can we utilize that in the best way? which again, to my point earlier, means that we can make sure that we've got empowered underwriters adding value rather than more manual tasks.
Yeah, definitely. That makes so much sense. And Sav, I don't know if there's anything from the research that you've seen in terms of innovations that the brokers are telling you via the survey.
Yeah, of course. So when it came to asking brokers in terms of what areas they feel could be effectively enhanced by AI, the top three were data analysis and reporting, fraud detection, and regulatory compliance and reporting. But also very much higher on that list was, predictive market analysis and trend forecasting, automation of trading strategies, personalized trading advice or recommendations, which I know many are doing. And what I would like to kind of really see and what's coming out from the survey this year is to have that kind of greater collaboration, but also for kind of insurers to take more risk when it comes to technology innovations and trying to get that more fast pace in terms of getting its speed to market. So and working with brokers along that journey to really embed those technology innovations, because AI is coming and it's here, but we're just at the start. There's so much more to come that will really blow everyone's minds, I think. And I think if we're able to correctly embed it into the systems in the market, that will really help free up a lot of time when it comes to that more personalized service that is given.
No, that's great. Well, it's a great call to action to finish on there, Sav. So thank you. And yeah, that's the hour up, I'm afraid. Thank you so much to all of our panelists for joining us today. It's been absolutely fascinating listening to your insights. Really appreciate you giving up your time to talk this through. And thank you to everyone at home in offices listening the other side of the webinar. Thank you so much for joining us and enjoy the rest of your day.